Hey traders, what's going on? Jamie Saettele here. Let me know that you can hear me and that you can see the screen. You should see just a blank Google screen at the moment. It just says US dollar in the search. All good, says P. All right, what's up? While I'm on this, starting this webinar, just a heads up, we got looking at Euro here as the chart as per last night. If there's going to be a short here, it's probably going to be up near 23.55, 23, excuse me, 23.60. That is the underside of that red line here, right there. Okay, so just a heads up. If we pop into there, I mean, right now confidence in some of these setups is not too high, given kind of the choppy short-term mess that's been going on really for like I'd say the last 2 weeks. But that's a level to pay attention to. All right, anyway, so the reason I'm doing this first and bringing up this this chart here is that, or the image, the news, sorry, is if you see, so I referenced it last night, right? We've got just bearish to the, bearish headline sentiment, right? Extremely bearish. You've got, Goldman's. This is a new one. I had two different ones last night. One of them was about outflows and huge outflows. Okay, distaste for US dollar, blah, blah, blah. Okay, Goldman sees, this is another one. Goldman sees US dollar weakness persisting in 2018. It's like, 2-3 days ago, they had a headline out about how bonds are no longer going to protect you in the event of a stock market sell-off. Stock market sells off for 2 days. Bond market has its best week since November, right? I mean, I don't know how these people get these jobs. They're all like Gartman. So whatever. All I'm saying is the headline sentiment for the dollar is extremely bearish, okay? And we have a chart level, right? Not the cleanest thing in the world, but here it is, log scale. And it's just a channel we've been working with on the dollar for quite some time. And we are looking at an extended parallel, which again was good resistance back in August, and support again actually in the very end of September and then in October. Actually kind of missed that one right there. So we've been riding along it, consolidating, and we hit it the last couple days, and now we're bouncing. Look, again, I'm in general, right, kind of a dollar bear here, right? Just very broad, but that does not mean that you chase dollar, weakness or downside, or force a dollar short just because you have some narrative. And even with the seasonals being what they are, you have to respect, again, the contrarian nature of going against the headlines and the fact that you have the support here. So where do we go from here? To me, this chart is really not clear from a pattern perspective. I would say, one trick is to look at where you came from, which we came from the spike here on 3-1. So if you draw a parallel from that high, right, 21 degrees, okay. That could be where you would want to see or watch for resistance, okay? And that's going to be up pretty much actually near this high from early February, all right? So, a move up into there, 90.57, that fits obviously with the potential for euro to come off in a larger C wave, which was suggested last night. We'll get to that here in just a moment. Another little trick is to work backwards and see if there's any touches on this, and like not really. It's not that great. But for the time being, in this period of kind of unclear action, if you will, that would be my best bet, is to kind of think that you get a little more of a pop here and maybe up into that 90-60 area. US dollar, right? The FXCM index actually has some levels that are a bit cleaner. So if we scroll way back, all right, we've got the 2011-2014 trend line. And again, this is not log scale. This is actually linear scale. But what we're looking at here is a tight channel. So if you just draw your regular channel from the highs here back in January 1st of 2017, low September, high November, right? You have the center line, okay, and then you have what I would call 12.5% lines on TradingView. You call them 25 lines, but what you've got here is you've been bouncing between those basically since late February. So you can see that hitting the support yesterday, you had resistance on it on 3-1, and so up towards that line over around this period over here is kind of where I'd be thinking that you head towards, for US dollar, and that's going to be the underside of that 2011-2014 trend line and daily reversal resistance, which is going to be the 3-1 close, and that's 11,688. Okay, so kind of have an idea, I think, of what we are looking for in terms of resistance in US dollar, in the dollar generally. Again, this is counter trend, of course, but kind of what I'm thinking or what I'm looking for heading into really the next week or so, right? And then we might be able to get the broader dollar bearish theme back on track. But for now, this is where my head's at, all right, with the dollar. So I would just kind of note those levels in this tight range. And now let's go to the individual currencies. Actually want to start with dollar Swiss because I really think that this level up here, I've been talking about it for weeks, but the 95.45, 95.50 area is really big, right? I mean, all you have to do is look at a chart, horizontal line on that picture, and you see it. But then if you draw a channel from up here, from the 12.15 to 2016 high, you see it's also the center line, okay? And if we go even shorter term and you draw a channel from here, I believe it's here, maybe it's actually, hold on for a second. I think it's this trend line, isn't it? Just right here. Yeah, so just draw a regular channel. And you can see that you have perfect channel, perfect touch here yesterday, right on the close. And the center line for that channel is going to be up here, it'd be kind of like next week, early next week is where you'd be potentially looking for resistance at 95.45, 50, okay? So keep that level in mind. In the interim, I think it's proper to trade from the long side in dollar Swiss into that spot, right? So with that, we take euro. And don't forget, we're the same dynamic that the same dynamic that was in play a couple of weeks ago, where I was talking about looking for the euro low when we get dollar Swiss up into 95.45.50. It's the same thing, right? We had a version of it here, and we traded up, close to the level and pulled back, and euro did find a low at that point. Okay, so let's bring in euro here. So here's last night's chart again. If we're going to get that C wave lower, you would have 22.39, 2 legs, but the very long-term parallel is something to pay attention to. And you got the former lows over here, 22.50. So that would be an area that I'd be looking for in terms of, support for euro. And in the very, very short term, is in like the next maybe couple hours, maybe during this webinar, I'd be looking at 22.60 as resistance here for euro. Okay, so you can see that's just simply the underside of this trend line. It is a trend line. It does touch 3 points, 4 points really on the short-term chart, and 22.60 up there. Also, you've got going really micro here, 24-hour average. Sometimes you have to go this short term when you're talking about these tight ranges. So that would also be essentially where the 24-hour average is. Okay, so pay attention to that level, 22.60s in euro, over the next probably couple of hours, to be honest with you. So those, that's my thought for euro next couple of days here, and then lower in a C wave, maybe down towards 22.40, but general area, call it 22.20 to 22.50. Moving on to, let's go to dollar yen actually. So last night I sent out some tweets as we were in Asia. Dollar yen started to tank a little bit, and we were looking for, I was looking for support at 105.71. Never got there. Overnight low 105.78, but in general, still looking at this parallel really, which I guess would be closer now to say 105.50 before you get a low that I would probably want to, trade, or, at least for a bounce. And I wanted to highlight, I just highlighted this on Twitter, but I wanted to highlight the parallel, that this is the 75 line from this fork, right? Origination point of that is the 11.6 high. And remember back in late January when risk, so to speak, risk off, whatever, was selling off, and you had that initial stock market drop, all right, and kind of the panicky move that ensued. We actually traded violently between the 75 line and the median line. So, considering the condition that we're in right now, something like that could happen, where you get where you end up getting kind of a panicky low down here on the 75 line at 105.50s, and then, spike up into the median line. And the median line, by the way, is going to be 106.60s at this point, really over the next day. And 106.63 is actually the month open. So for me, the two levels that I'm really going to pay attention to, or that I care about, are going to be 105.55 and 106.63. Then that's really, that's really it. I'm not interested in forcing a trade, into say 106.26, this little low here, square root level, that could be resistance for the drop into here. I'm not all that interested in trying to trade that. I'm just looking at the 75 line and the median line at this point. And, I see you've got this, what looks like a 5-wave move here, right? And that should tell us that we have a big low in place. It's just not that clear to me from, say, a momentum perspective, or, you know, even I say even a broader, if you look at some of the other yen crosses, I still feel like we could, you know, we've already gone through the 618, 106.02, okay? We're kind of trading around it, but none of this looks like clear to me at all, right? I mean, you could have, this could be an A, 3 down B, this could be a triangle and a terminal thrust, but it's really small, and then this could be your 5. Even if it is, you want to see 3 down, and we really haven't seen that yet. So if this is A and you get the B here and then the C, hold a low, or, you know, then you could have a bullish opportunity. Don't try to think about all that. You'll, you know, right now you got too much to think about. You won't be in the right mindset to trade. So just pay attention to the 2 levels. Again, 106.63 median line, 105.55 low from 216, and the 75 line. That's it, right? And another thing with this, and Mahai, what's going on, my man? I just asked about the Nikkei, and that plays into this as well, right? Yeah, absolutely, Pooja. I was thinking the same thing. But again, when we talk about dollar yen here, you do want to be aware of the Nikkei, right? And in terms of the Nikkei, we've still got pretty big resistance up here. We're still below it, right? So you got the median line, you got the low from over here, you got the 200 period average on a 4-hour chart, okay? As you can see, that's a pretty darn good average. I mean, we're going back here, you know, going back over a year, and you can see how well this defines trend. Very well, okay? And we just tagged it, and it's downward sloping. So, you know, getting up into this level again, as we rally now, I'd be paying attention to resistance up there for the Nikkei. And again, a final drop, I'd love to see support down near 21,289, okay, which is going to be your weekly reversal support, right? To see that visually, I'm going to put up a candle chart here, and you can just see the week close, the low week close. That's all it is, okay? And method works quite well, especially on those panicky moves like that, where obviously it was a huge high volume level. So, you know, in a perfect world, we'd get kind of a drop in the Nikkei down here, and at the same time, you'd be getting, say, 105.50 or something in dollar yen for a panicky type low, and then you can get the big rip. S&P on the move here on the upside. Let's see if we can get 2 equal legs. 27.63.10 would be 2 equal legs, which would be right about that spike high from yesterday afternoon. We'll go to the S&P here in a little bit, but I wanted to highlight that for you. All right, let's go to Aussie. Aussie, Euro Yen trades that I put out this week. What a pain in the butt. You know, they right ideas, but just, you know, taken out on quick spikes, what have you. You know, I thought we had the right idea on getting kind of bearish for a pullback, or for this pullback, at 78, you know, 90s. And we had that little reversal at the end of the day on Tuesday. And then, you know, they ran it up, went up to 79.15, reversed the whole thing. And then here we are coming really into support that we were targeting. So frustrating, yes, but that is kind of trading. So here we are, and 77.90. You know, we had 77.20 was the target for the shorts that were stopped out. We would have hit those just now, printed 78.16 this morning. The level where I'd probably be a buyer, you know, is again, I wrote this, you know, in the swing updates, would probably be closer to 77.90. Again, just a trend line off the lows. 200-day average is right here, but you know, from a precision type, you know, move here, we're looking at trend line off the lows, and then the 618 is 77.90, and you've got some lows over there. You got the low here from 222. You know, if you drop into that, you could be making yourself an inverse head and shoulders pattern. So would watch for that. In the interim, you know, 78.50, just the low from yesterday, I'd be looking at as potential resistance. But, you know, we're dealing with a pretty tight range here. And I think the right move is to look for that support down near 77.90, especially given that we've got kind of a 5-wave move up here, although it's a bit tricky given this final push. I don't know what the hell that thing was. It really kind of threw me off. Anyway, so pay attention to 77.90 for a potential, you know, higher low in the Australian dollar. And again, you go way back on this chart. I like to post the long-term charts for you guys as well, so that you know where these lines are coming from. So they're not just, you know, you think they're just like random lines on a chart. And it's just the channel all the way back, you know, to the 2011 high, and the associated parallels with that chart. Okay. And you can see the magenta one here, very, very clean. That would be the 75 line of this channel. You can see literally every time it's hit, it's something, it's big, it's important, right? So you can see the support back here all the way back to May 2012. Okay, lots of trading around it back in June, July, August 2013, you know, continuing through 2013. Big resistance in October 2014 before literally Australian dollars crashed, and then continuing on to September, right? Big resistance, and then again back in February and just yesterday. So point being, you get above that, and I would consider it, you know, a pretty important move for a breakout, right? Important to know that as well. I know we concentrate a lot on, you know, where's the next trade? Where's the next trade? We're looking for, you know, 77.90 support or something. But the big development here would occur if we were to take out this parallel, right? If we were to take out this parallel, that to me would be an important bullish development for the Australian dollar, and something that I would take seriously, especially in light of the you know, the bullish seasonals that the Australian dollar now enjoy. You know, generally bearish dollar seasonals, but much more bullish for things like the Australian dollar, even the Canadian dollar, which obviously is getting beat to hell right now, and things like crude oil, even copper. So those hard assets. Anyway, that's the Aussie. Don't want to forget about the importance of the longer term picture. All right, looking at, let's go to Kiwi. We're going to stick with the daily chart view here. So we are looking at Kiwi from the channel. I still think that we should be following the channel from basically the 2015, 2016 lows. And when you look there, you've got a pretty clean impulsive advance. It is overlapping on the intraday chart. You'd call it maybe a leading diagonal, but there's a very simple, very clean level to pay attention to. And that is 72.50, which is the 618. It's also daily reversal support. It's also the parallel, okay? So again, just like the Australian dollar, we can get a drop, you know, kind of a 3-wave move lower in Kiwi and Aussie, etc. We'd be looking for, a higher low, and then resumption, it probably up towards 73.90. 73.90 is daily reversal resistance. So I'm not sure, obviously, how long these ranges are going to persist, but that's where we should be looking, in my opinion. It's probably here and here. So 72.50, 73.90, maybe 74. Okay. If you scroll back on this chart, you can see, pretty clean too, the 25 line on this chart at times, especially back in March of last year. It's actually exactly a year ago where we had support on that line, hit the median line resistance, support again. We could literally be just doing the same thing. We could trade, back here and up into the median line. So these, I think, are your levels to trade for the New Zealand dollar for the foreseeable future. Okay. And Pooh just says, thanks again for the long-term views. Very, very helpful. Absolutely. And like I said, we tend to get, as traders that are making money. It's how we live, right? We tend to get lost sometimes and force short-term views rather than, be as aware of the longer-term pictures as we should be and where the big important developments do happen. So yeah, it's extremely important. Let's go to the British pound. We haven't gone there yet. Very bullish, the British pound. Not entered simply because of the headline dollar bearishness. I was thinking we would get more of a pop in the dollar, which I still think is a distinct possibility. But if we just scroll back and look at the daily chart, right? A couple days ago, I had this one on. You're looking at a channel, just connecting lows from I guess that's last March actually. Yeah, 314, 1 year ago, almost to the day, where you made a low in the British pound, and then going to the November low. And those parallels are very clean. Focus should be up on the median line, probably towards 41.96, which is a square root level. And I expect us to get up there probably over the next couple of weeks. In the meantime, do want to be a buyer. Ideally, we do get some of this dollar bearishness to go away with a bit of a dollar pop, and the levels here are clean. I'm kind of holding out or hoping, if you will, that we can get a test of the top side of this trend line, one of the cleanest short-term trend lines we had in a while, of course. Of course, if you do that now, then you will have not held, the parallel that we just talked about. So, let it clean itself up, let it start to make sense. It's not inconceivable that the British pound maybe churns back and forth above this, while euro maybe tries to, and Aussie and Kiwi, et cetera, correct a little bit more to the downside. To relieve, again, the headline bearish, dollar bearish sentiment that's out there. But yeah, I do like British pound higher. I think we're going to 142. It's just a case of, where do we get in, right? Are we going to be able to get down to 38.70, or, was this little drop this morning it? Again, I don't know, that it's not too clear to me here in the short term, but just know that I like to be bullish British pounds on weakness preferably. Okay. All right, let's go to dollar CAD. Then we'll look at some other stock indices, DAX, S&P. We did look at the Nikkei already. Let's take a look at what that's doing right now, actually. Yep. So again, watch for resistance up here. Okay. Median line is going to be, pretty close to the high, but you get the idea. Okay, dollar CAD, S&P real quick. Sorry, I'm all over the place. I'm trading stuff right now too. You can see we just tagged the high from the spike high from yesterday afternoon. Let's see what it does here. dollar CAD, Canadian dollar is just getting destroyed, isn't it? So I will admit, one of the problems that I have in my trading, and I guess this would extend to my analysis as well, and this is important to be self-aware of what your weaknesses are, right? So that you can be, if you're aware of them, then you won't, it's very hard to fix them, but at least you won't act on them and be detrimental to your trading account, at least to a large degree. But we've had this channel that we've been following for quite some time, and the short-term channel, that is, and we turned down, and yes, I admittedly have some sort of a bias towards wanting to be short dollar CAD. Not extremely sure why, but we've had this channel and we've had very clean touches on it, and I haven't traded it. Like, this is a great long right here. Like, what did I, what am I doing? I guess because we have a broader bearish channel, so I'm kind of afraid, if you will, to trade against that. But at least being aware of it, I know that I'm not trying to short into this, right? And even this morning, the last day, we're hitting on the median line here, and then we're going higher. These are, textbook type of median line trades, if you will, that we should be looking at. And I've just kind of ignored them, if you will, because it's against my bias, but at least I'm aware of that. In any case, where from here? Okay, so two equal legs. Let's go back to the daily chart. Two equal legs from the September 2017 low. All right, two equal legs is going to get you 131.03. Okay, that is basically the top of the channel, the short-term channel that we're looking at. If we go to an hourly chart, I mean, if you got there the next couple hours, you'd be there, right? So that area just above 131, big spot, okay? The 618 of the drop from May of last year is going to be 131.51, so it's a little higher, okay? It would be better, in my opinion, for a longer term potential short position if dollar CAD were to consolidate a little bit here, whatever, maybe make a triangle, that would be great, and then pop real quick up into that 131.50, because at that point you would also be on the long-term trend line, which is the 2016-2017 trend line, okay? There is also, again, here we go with the longer term stuff. There is also this trend line back to September, September, 2012. Beautiful touches in 2013 and 2014, right? And the center line from that channel was resistance. There's even support for a day last July, but was resistance throughout 2017, and we're getting pretty darn close again, okay? So again, being aware of the really long-term picture and where the big inflection points may be, right? That's important. So do not ignore that fact. I haven't seen too much in the way of, Canadian dollar sentiment extreme in the news yet. I haven't seen much like that. And, with my thinking that the dollar holds up here for a little bit, I have no plans on trying to short this whatsoever at this point. I just want to be aware of the levels on where it could be a spot for a turn, okay? So be aware of those longer term levels. Again, for me, nothing on the docket as far as near term near-term stuff to do. Let's go back and look at this channel again. I mean, it's getting pretty mature. You could count it as a 1, 2, 3, 4, maybe a 5, little dip and a rally. Either way, pay attention to the area above 131. Kelly says no holidays out of country this year if CAD keeps getting destroyed, which I also wait to hear what happens with NAFTA. Yeah, that's another thing. So you've got the whole NAFTA thing going on, and remember what happened last? I guess it was last week with the steel tariffs, and everyone's freaking out. Well, the steel tariffs are happening, blah, 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 blah. And what happens? Canadian dollar ends up rallying after it comes out that they're going to be exemptions in NAFTA and everything else. And I know I'm not a fundamental guy, so to speak, but I am aware of the big picture of fundamentals and or what I consider fundamental. I'm not fundamental from the standpoint of I'm not trying to predict what's going to happen to NFPs, but if we think about what's going on with the housing market in Canada, right? There's a big housing boom. I saw the numbers are starting to come off. It's getting soft. Ostensibly, a lot of people would tell you that is going to be very Canadian dollar bearish, right? Well, eventually, that's probably true. But initially, if there start to be real problems in the housing market in Canada, and there's going to be a mad dash for repayment of debt, repayment of loans, that actually initially could be quite Canadian dollar bullish. You get a big jolt for that because there's demand for Canadian dollar to pay loans. It's like the same thing that happened similarly here in the US when there was a housing crisis. Initially, it was actually very bullish because there was a rush for demand for dollars to pay debt. All right, so that's something that you probably won't hear in other places. And it goes completely against and counterintuitive to what you'll hear from pundits and whatever. So just a thought. Anyway, for our purposes, all we really care about is what happens around 131, right? So there you go, 131. Before we look at the S&P and the DAX, and before I take questions, let's take a look at some CAD crosses. Mahai, I am here. Yeah, I know you are. So some CAD crosses. I think that CAD yen is probably the most important one to pay attention to. Just about there. You can see the 5-wave move down. We're getting really, really close. So, talk about a possible home run. If we can find a low down here, near 81 or something, or so I said below 81, just below 81, look out. You could get a rip off of this, okay? Biggest level, I think, to pay attention to in any CAD cross. And then, of course, we have CAD yen, Euro CAD, which is also going through the roof and nearing its own channel. This is the channel all the way back to February of 2017. So we're talking about a year-long channel. This is no short-term channel. This is extremely important. And the level that we are trading into now is actually above the 2016 high, just like we did last week, and we reversed last week, and now we've traced the whole damn thing. But what I'm telling you is pay attention to this channel, because what's going to happen is you're going to have everyone get so jacked about the move through the top of this horizontal level, okay, that then, well, we're going a lot higher. And look, maybe we do, but this is where slope analysis or median line analysis can come in so handy, because we're looking at kind of a different way, right? We're looking at the angles and the way the market trades, and I'd say this is a pretty damn good angle, right? I mean, major trend line, right? Great touches to the pip, pretty good median line, lots of trades around it. Okay, big move off of that just in the last couple of weeks, pull back. So watch the upper parallel. It's going to be, depending on when you get there. This is log chart, by the way, so it's going to look different. This is linear. Linear had already hit it. But if we, look at log, you're talking about 62.50. That could be a blowout area for Euro CAD. Okay, so I just want to highlight some of those levels. All right, let's go to the S&P and the DAX. Start with the DAX. Not much change for me when I look at this chart, Mahai, in the sense that, remember last week we said to really pay attention to the median line up here, because if you could take out this high, it's the same thing we just said, same dynamic I just said with EuroCAD. You can take out a horizontal level, right, and get a stop run. And look, I know all about stop runs because they've abused me for the last 2 months. But if you can take out a horizontal level but trade into the slope level, then you've got a great setup for taking out the stops, taking out the shorts, and then they run it lower. Let's see if we can look at the short-term chart and see what it looks like. I mean, near-term interpretation or near-term pattern is certainly open to interpretation, I should say. All about levels, all about levels. So which level gets hit first? That I don't know, but I do know that we've got three levels to pay attention to. One was almost hit just now on this run up, and that is going to be basically 12,400. It's also the close from 312, which is 12,404. So call it 12,400 for some resistance potentially. And then basically you're looking at kind of just a retest down here of the close, the 3.5 close, daily reversal support. That's going to be 12,171. Okay, it's also this parallel, which was support back here on 2.9 and support back all the way on the U.S. presidential election. Okay, so resistance, support, and then resistance back up on the median line in the 200-day. Okay, those are all the levels that I would pay close attention to for trading purposes. Again, with pattern-wise, not so clear to me, as a lot of things are at this point, but the levels are pretty clean. And that, for a trader, that's kind of the thing that matters the most. It's great when you have pattern and levels match up and everything's clean, but at this moment, it's just not the case. But the levels, I would, be willing to kind of short up, really where we just ran up into, pretty close to it, more like 12,400. We hit 12, I think, 12,385. Take it down and take it higher. And you can kind of see too, if we get this run up into the median line, which I think we will at some point, then you're talking about maybe that helps, put the euro down a little bit too, back down to the 22, mid 22s. Okay, S&P 500. So starting with the long-term one, which I posted on Twitter last night. Schiff fork from the 2009 low, right? Associated parallels on that as well. That high from 2.7 is 27.27. Okay, we had 27.36 basically as a level because it's the 110 low. Didn't quite get there. Last night we printed 27.40 overnight in Asia. I'm looking for essentially a little more downside before I would say, before I'd be a buyer, and that's kind of the case with dollar yen, right? Like, and the Nikkei and the DAX. So there's a theme there as far as looking at the charts and the levels that I'd be a willing kind of, turning short-term tactically bullish, at least for a trade, right? If you scroll back and look at this chart, I mean, doesn't this look like a blowout? Came back to 200-day. Probably have to do a lot of work in here, I would think, right? Probably have to do a lot of sideways trading before you can try to go higher. At best. At worst, you're talking about a larger, much more important top. But yeah, the level's clean. I mean, 27.27, that 2.7 high is huge, okay? Because one, it's a huge spike, rally high, and two, it's a parallel that's been, clean as hell for many, 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 many years, right? Lots and lots and lots of important touches on that parallel. So that's where I would be paying closest attention for some sort of a bounce. Now we go to the intraday charts. Intraday charts, not as clean. The other night I had noted that you probably have resistance up around the median line here, and we did get that yesterday. We didn't quite get to 27.37. We got 27.40, right? From here, again, I'm looking towards that 27.27 area, okay? If you did that too, you'd be taking out the spike low on NFP, which would be kind of a classic, return to where you came from, screw with everybody type of move, right? And that NFP spike low is 27.29. So to me, that makes the level even more important, right? The 27, 27, 29 area. If you want to round it, call it 27.30. But where's the really big spot? I think probably the really big spot as far as, not macro, but like intermediate, macro for probably someone like me who's more of a trader than an investor, but the 2700 area, I would say, is pretty big, right? 2700, it's a high volume level, and it's the highs from back in December, really before we broke out and went bonkers in January, right? Those highs right there, and you can see pretty, support. I mean, closing basis, yeah, you're holding above it on these moves, but you get back below 2700. At that point, I think you'd have to really take a much more important behavior change quite seriously. Okay. We've got like 10 minutes left. I've pretty much covered most of my stuff. I know we didn't look at gold and silver or oil yet. Silver still, I mean, they're doing nothing. The biggest thing on silver for me is still the COT. I'm not going to go over it. We've gone over it a lot the last 2 weeks, but you do have essentially a record position on the, short side or not record, but speculators have turned that short, and that like never happens, and that's a buy signal. But we haven't gotten it in the chart yet. You got to get above the 200-day, and you probably need to get above this trend line before you get anything out of it. Gold, same story, different day. Still thinking that you could get 1295, still maybe the 200-day. I'm not sure. It's kind of wasting time doing a lot of nothing here. And crude oil is actually still holding support, but you got to draw a line at 60 bucks. Okay, you get below 60 bucks, that means you've broken this line, and I think at that point you probably, you know, have to respect till at least 59 before any sort of a bounce. It's the low day close or daily reversal support. Okay, Christine asking about euro yen. You got it. Let's look at it. Yep, here's another frustrating one for me. Right idea, I think, in the short on the median line, but just like Aussie, got taken out. On a daily closing basis, we actually didn't break 32.10. That was kind of annoying. And there's some traders, by the way, that I know that it will be like, they'll say they use daily closing prices as, you know, as stops. I'm like, okay, that works like most, like 90% of the time until the one time when you lose everything. So I'm not down for that. I get it if, you know, you want to take that risk. I don't, but whatever. It's like not using a stop, basically, right? Because you're not if you're using a daily closing price. Anyway, 4-hour chart here. If we look at euro, excuse me, we look at euro yen. Christine, I still think that the big level for euro yen is this parallel. I think that's where we can go. You know, at this point, if we get down there, it depends how we get there, right? If we get there slowly, methodically, down towards the end of the month, then I'd be looking for a big low. Just know that that's where I still think we go. I still think we can go down to 28, you know, 40 to 28.60 from here. Okay. Where would be resistance? The spike up here kind of threw me for a loop, right? Because now you don't have as clean of a structure. Like you still have the median line here, but it's just not as trustworthy, if you will, because of the spike that we went through. But I will make an attempt here to find some decent support or resistance, I should say. Okay, so I would be looking, Christine, at, you see this parallel off of here and then resistance on these two spikes. That's going to put you around 31.35. Okay, 31.35 is where I would look for resistance at this point. Much above there at all, and I wouldn't want to be involved on the short side. But that's where I would be looking, and I would be targeting nothing probably more than really a test of the low, because at that point you have the next parallel that comes in. It's just my take here on the levels, right? That's how I would be looking to play it if I were forced to trade euro yen right here. Okay. Pound yen, I want to go, let's look at pound yen. That's actually a pretty interesting chart, because, you know, talk about one that could actually be bullish. So here's the channel back from April of last year. Okay, very clean, this log scale, very clean. And it's probably that line right there, isn't it? It is that line. Too perfect. Okay, so what I'd be looking at here on pound yen is actually a way to go the other way and maybe play a surprise upside move at some point. Remember, broadly speaking, we kind of like the British pound, or I like the British pound on the upside after it clears out whatever's going on with the dollar here. So see this line right here, support, support, support. I'd actually be looking down towards 46.85 for support, and my eye tells me that there's something there, and there is. You got those lows right there. So you got, you know, we're currently 48. You got 100 pips on the downside from here before you'd hit a level where I'd be like, it's a buy. Okay. So watch that pound yen chart. And if we look out a little bit more, On the weekly chart, it's a 5-year average. Same. Oh, that's a daily chart. Okay, on the weekly chart, excuse me, let's put in a 1-year average or 52 weeks. And that is the average that we've touched the last 2 weeks. We'll probably touch it again this week because I think we do come down back into this level. So that 52-week average is something that should be respected by us as traders. All right. So yeah, watch that 46.90s-ish area in pound yen. Okay. All right. Anything else? I'd be happy to look at whatever it is that you want to look at. Got like a couple minutes left. Going once. Oh, before we go, I do want to look at bonds. Wow, talk about a reaction off a level. Look at that, S&Ps. All right. This is, we'll go to the bonds first, and then we can look at TLT. So if we go to the bonds, you probably see me talking about this chart a lot, but 1981 to 2000 trend line, that is exactly where we bottomed so far on the bonds. And look, I think this is a counter trend rally, but I also think that it can carry up to 147 and change. Okay, 147 and change, that's 3 long bond points away. That's, you know, it's a decent move. We're already 2 off the low, so a little more, or not quite halfway. But big thing there is obviously the median line. The red median line's in red because we should be selling it when we get there. You also have the 2015 low, or sorry, not that was down here. You have the June 2015 low, which was support after the presidential election in 2016. And it's also the 38.2 of this drop. So talking about 1, 2, 3, rally, and 4, 5. Okay, so if you trade bonds or you trade TLT, that's what I'm looking for. If we go to the TLT chart itself, you can see we're trading on a corrective channel right here. If we can blow through it, then you could change it to an impulsive channel and something like this, okay? But either way, it remains, to me, kind of a buy dip market with support right here on the breakout level, which is 119.30 for TLT, and looking higher, again, just like, you know, the US bonds, probably up here towards 121, 122, okay? So I thought you'd find maybe something interesting there with the bonds. All right, that wraps it up for me. And everyone have a great rest of your week, what's left of it. If you watch college basketball, it's the greatest time of the year, right? We got March Madness, so enjoy that too. And have a great weekend. All right, bye, thanks.